the number one thing, and I wish I was better about this actually, step one is just don't be invisible. Don't go into a relationship with a financing partner and then just fall off the face of the earth the second they write a check. You should be following up. Hey, let's have a follow-up call. I want to talk to you about some of these hires that we're making. And also not being afraid to make specific asks. Hey, you guys have mentioned this group. Is that somebody you might be willing to make an introduction to?
All of us at Cultivation are overseeing dozens and dozens of companies, so it's hard to keep one company top of mind. I would say a lot of it is going to be on the founder to really make those asks. That's been a big thing and something we've really been trying to harp at our portfolio companies. It's like when you need help, ask for help, and feel free to reach out whenever, and just don't be a stranger.
Welcome to Inside the Deal, the podcast where we explore how funding rounds come to fruition from start to close. I'm Adam Hardy from Sandhill Markets.
And I'm Steph Moy from PIN. Our head of growth, Daniel Wiegand, and I are teaming up to host this podcast with Sandhill Markets. Together, we sit down and discuss the intricacies of how venture funding rounds come together.
Tune in to hear how investments are formalized from both the founder and investor perspectives, from initial conversations to final close.
Whether you're an investor or founder curious about the fundraising process, please enjoy the episode.
All right. Hello, everyone, and welcome to another episode of Inside the Deal. I'm your host, Daniel with PIN, and I'm joined today by Matt from Cultivate Capital and Graham from CAD Chat. Thank you guys both so much for taking the time. How are you guys doing?
Doing well. Thanks for having us.
Yeah, doing great. Yeah, thanks for inviting us on.
Yeah, fantastic. Excited for this conversation. So, Graham, let's start with you. Would love to hear a little bit more about your background and what it is you guys are building with CAD Chat.
Yeah, absolutely. So, first off, Graham Brandemeier, CEO, co-founder of CAD Chat. My background is for a little over a decade now. I've worked in manufacturing, largely in additive manufacturing, so industrial 3D printing. For 5.5 of those years, I actually ran another company called Collider Technologies, which was based out of Chattanooga, Tennessee. I had an exit, kind of process with that company about 3.5 years ago, and ended up doing some work at some other organizations kind of post the spin down of that org. And ultimately that led to what we're building here at CAD Chat, which was, basically this workflow of having learned what it's like to go through physical product development from beginning all the way through to production scale, all the way up to millions of components, along with my co-founder, Dan Ward. And really just figured out that there's a few big problems, which is you're pretty much always behind schedule. You're pretty much always over budget. And a lot of that comes down to the fact that it's really hard to communicate because you have partners kind of all over the country and in a lot of cases all over the globe. And you're trying to communicate about largely digital designs, and you're not in the room to sit there and point a finger at the computer screen and say what's going on. And so we said, there's got to be a better way to do this. There's a lot of great software out there for designing parts for manufacturing, but there's not a lot of great software out there for communicating about these matters. And so that's kind of where the inception of the company came from. And ultimately the product started out at another org, which we pulled out. But I can say more on that later.
Awesome. And Matt, tell us a little bit more about Cultivate Capital and what you guys are looking for.
Yeah, absolutely. I'm Matt Pimbavong. I'm a principal at Cultivation Capital, and we're a St. Louis-based venture capital firm. We have a variety of funds focused on a variety of different industries: B2B software, ag tech, life sciences, geospatial technology. I focus more on the B2B software side of things. And within that, we have two funds. We have an earlier stage fund called the Spirit of St. Louis Fund 3, which was the fund that invested in CAD Chat. And we also have a fund called Tech Fund 4, which is our flagship, larger Series A sort of fund, focused more on a little bit later stage companies than the Spirit of St. Louis Fund typically invests in. We provide a wide range of capital and services, but I would say for our smaller funds, we're looking at $250,000 to $500,000 checks, and for our larger funds, it can go up to about $3-ish million. Really focused on just companies that are building exciting technology and areas that we deem undercapitalized. So we focus more on middle of America and markets outside of the typical hubs of Miami, San Francisco, New York, places like that. Focus more on areas that are a little bit overlooked when it comes to venture capital.
Awesome. And so let's chat about sort of how this first meeting even came to be. So Graham, what was your sort of reach out strategy? Did you just cold reach out, or was there a warm intro, or how did that process work? And how much did you, I guess, think about strategically, getting in front of Cultivation Capital?
Cultivation, if I remember right, and Matt, you might have to clear this up for me, but it was an introduction. I can't remember precisely who connected us, but it was somebody who knew both of us, put us together. Matt, do you remember who it was?
Yeah, I believe it was Paul at Venture South.
That's right.
I'm a board observer on a company that he's a board member on. And so we have a good relationship through that. He was really excited about the Cat Chat deal. And so he pulled me aside one day and told me about it. And I was definitely all ears. Made a lot of sense, both from a technical standpoint, but also a geographical and just mission standpoint as well. So I think that's kind of how the introduction first came to be.
And so out of curiosity, is because it was a warm intro, did you even take a look at the deck beforehand, or was there any sort of material sent over, or was it, hey, I like this concept, it's coming from someone I trust, like, let me just take this first call?
Yeah, because it was coming from somebody that I trust and a fund that we've worked with before, it was really just a 3 or 4 sentence pitch. I'm like, all right, I'm all ears. Let's get the intro going, that sort of thing. So yeah, I didn't need to be convinced all too much for this one.
Yeah, I mean, warm intro is obviously the best way to go. Not the only way to go, but definitely helps. And so let's chat about that first meeting. Graham, what was your strategy sort of going into it? Do you have, a typical strategy? Like, do you pitch with a deck, or how do you usually navigate those first call meetings?
Anytime I go into a first meeting with a potential venture partner, I always have a deck kind of on the sidelines if we need it. It really depends on which direction the conversation goes. I believe in our case, we did pull up the deck and screen share it. And we went over quite a few details with Matt. And I believe maybe we had a couple of other individuals on that call as well who really I really enjoyed the team. And my strategy going into pretty much every venture conversation is I'm not going into it with this mindset of, hey, I'm trying to convince somebody or whatever to participate in a financing event. I'm walking into it with this mindset of, look, I'm at a certain stage with my business. One of the things I know about the way that my business is anticipated to grow, the way that we're projecting our growth is such that, our scale of growth will need to outpace our scale of revenue over some window of time, right? Whether that's, 12 months, 18 months, 24 months, whatever that timeline is, it's, hey, I know for this window, I'm going to need more capital than what I'm going to have on hand to achieve my scale of growth. And so, I just come into it with a really open mind. I show up as myself. I don't really go into presentation mode, and I just, say the reality of, here's where we are. There's a lot of really positive things. And I think Matt would agree with this. Even in our first call, I think we were super transparent about, hey, look, you guys, there's certain things that we know we're really bad at right now. And actually, that's part of what we need capital to go execute is to go fill in these areas where maybe we know as a team we have blind spots. And so, yeah, my strategy is to be very transparent and to find ideally venture partners that are looking for a relationship that aligns with the type of relationship that we're looking for, meaning the shape of our business financially aligns with the kind of businesses that they're looking to invest in, and that we happen to be in a market that they have an awareness of and can provide more than capital resources, introductions, things of that nature. So anyway, that's kind of my goal going into these meetings is open up, be an open book, answer these types of questions, and let's see if it's a good fit.
Yeah, and so Matt, from your end, it sounds like it was more than just you on that initial call. Is that standard practice for you guys, and is that how you guys normally operate? And then lastly, is there a preference on your guys' end of how founders, take that first call, or so do you sort of leave it up to them?
Typically, it's usually just me for a first call. In this instance, given that it was a warm introduction by somebody that we trust, and one of our partners is in Greenville, South Carolina, and Cat Chat's based in Columbia, South Carolina, there's just regional familiarity there, and I wanted that partner on the call as well, and they were certainly interested in learning about it. So for that reason, I had a partner with me for the first call, which usually doesn't happen, but for this one, I thought it made sense. And I guess the second part regarding a pitch goes, when it's just me, I'll do whatever the founder is more comfortable with, whether that's having a conversation or walking through the deck or whatever. Usually, when there's a partner involved, we ask to have the deck up. It keeps us a little bit more focused, lets us like kind of formulate questions a little bit easier, and just keeps us kind of on track. So it's more focused on the business and how things are working rather than, might go off on a tangent on some like personal item or something.
Right.
So, because typically it's like 30-minute conversations. So there's not a lot of time to explain an entire business model or anything like that. So time is kind of precious. I would say our preference is usually a pitch deck, but for me personally, it's really whatever the founder prefers because I want them to provide the best pitch possible.
Actually, so on that point, Graham, was it just you in the call or did you bring your co-founder?
It was myself and my co-founder. Now, that's not necessarily the typical approach for us. So frankly, most often I'm taking lead in these sorts of conversations, so to speak. There's zero decisions really at this stage of the business that my co-founder and I don't make together that are, massive decisions of the scale, right? In terms of things that impact your cap table, your financial situation. It's things that there's awareness across the board. It definitely is helpful, though, oftentimes, at least, especially after the first meeting, to have, your co-founder there with you, in my opinion. I definitely prefer that because there's things that Dan has, that are extreme strengths of his, things that I have that are great strengths of mine. And we're definitely better together as a team. In this particular case, we did do the pitch together. A large cross-section of that was because we were geographically that day happened to be, we had proximity that day. We were in the same room and it was like, you know what, let's go across the hall and do this call together.
After this first meeting, Graham, what were your feelings about how it went? Did you feel good about it? Did they tell you at the end that they'd like to have a second meeting or how did that all go down afterwards?
So generally speaking, if I'm having a conversation with a potential financing partner and they open the door for questions, which most of the time they do towards the end of the meeting, it's usually one of my key questions is, what do the next steps look like? In this case, it was obvious from the way that the conversation went that there was some natural chemistry regarding the deal in our business. At least I felt, and so. From our perspective, it was okay. We're going to be setting, some form of a follow-up meeting. I don't remember the very specific details of that, but I do know that we walked out of that knowing what we would be scheduling a follow-up time. I believe it was for a discussion with even more partners, if I recall correctly. But we walking out of that meeting, I would say we felt like, man, we really liked this team, and they are people that we would love to, partner with. Theoretically, they had relationships. They have team members who have backgrounds that overlap with our user base, even, which is always a really good signal because it's a financing partner that not only has access to some relationships and potential future financings. Right, you're always thinking about who are my partners who can help me not just today, but in a future financing event. With connections and things of that nature, but also they deeply understood the pain and the problem and knew some people who also understood the pain and problem. So for us, it was like, man, this is a pretty good fit. We're excited to have the next call.
And Matt, on your end, first question, you mentioned it earlier, it's a 30-minute call. Usually it's tough to get through everything. What was it about that initial call that, maybe tipped the scales and got you excited to take that next call? And if any, were there any hesitancies that you guys were, maybe a little shaky about?
Yeah, so I think the things that we liked were the founding team. I thought Graham and Dan really knew what they were talking about. They've experienced these kinds of problems and really understood the pain points, which is always nice. So just having their kind of expertise on this was certainly something that stood out. I would say the fact that they were already able to get an enterprise level customer was also a big kind of green flag for us, just knowing that at a very large company they were actively using this and were looking to scale up and buy more seats was something that was really exciting. And then just kind of the product itself has this kind of innate flywheel effect where if one company is using CAD-Chat as a tool to collaborate, the other companies that are collaborating with them are probably going to want to use this tool. So it just seemed like it made a lot of sense from just like a business model perspective as well. Those were probably the three major things that I think really stood out to us. The one hesitancy I think we would have is it was just a little bit earlier stage than what we typically look at. Usually we're looking at companies. Our sweet spot, I would say, is like 250,000 or more in ARR. CAD-Chat wasn't there. And so we did have to like kind of get comfortable with just like, they have one customer. It's a very like well-known enterprise customer and everything. And that was really exciting. But, just kind of that sort of risk with having one customer and like being so early stage was something we had to get comfortable with. But at the end of the day, that's kind of what our Spirit of St. Louis Fund is for earlier stage companies that are looking for more capital to really scale to get to that point where there is no more like early stage risk, that sort of thing.
Yeah. And then so from your guys' end, how do you traditionally go about scheduling follow-ups? Do you know right away and do you tell the founders normally? Or is it, hey, let us all go reconvene. We'll chat about this, in our investor update meeting, or how does that normally work for you guys?
Typically, we say we'll chat about it at our investor update meeting and get back to you. I'm not sure if we said we were going to schedule something immediately on the call or not for this call with CAD-Chat, but given like the size of our fund and how lean our team is, it's just myself and two partners. So we only needed one other person to really hear the pitch and learn more about it. So it was a pretty quick turnaround. We basically said, hey, other partner, we're excited about this company. We think there's a lot of momentum behind it and a lot of interesting tech. Would you want to hear the pitch? And he said, yeah, absolutely. So we set it up pretty quickly after that. And then from there, all three people kind of have a good idea of where we're at, what we like, what we don't like, and what we need to diligence and things like that. So from there, it's more just the diligence process. So our entire kind of investment process moves a little bit quicker compared to, I think, most funds, just given the smaller size and earlier stage that we typically invest in.
Yeah, and I think I probably jumped ahead there, but just for everyone, Graham, this was a seed round, correct? And where were you at in the process? Was this, early on in the fundraising process? Did you already have some commits? Can you talk about like sort of where you were when you guys started chatting with Cultivation?
Yeah. So this was fairly, I don't want to say like very at the end, but it was fairly, late in our round. So, late's maybe the wrong word, but it wasn't like at the very beginning of our financing round. We were pretty close to the end, and that's really when the conversation started. We did already have a pretty significant amount of capital committed in this particular financing event.
And we were chatting a little bit earlier. You said you had sort of a pretty unique fundraising experience. You want to touch on that a bit?
Yeah, sure. So we're and look, I say this to everybody. We're like a really oddly shaped startup. We have a very mature product in a business that looks like the age that it is. So our business is 12 months old. Our product is like 3.5 years old, maybe even 4. And so our product started out at another organization that my co-founder and I both had worked at for a period of time. And I was specifically over the team that went out and did all of the I actually personally went out and did a lot of the customer discovery work and then ultimately built a team to develop this product. And my co-founder and I ended up buying some of the original core technology out of that business and launching our own venture kind of around, which is pretty unique circumstances. There was a large variety of things. I'd prefer to steer away from the details, but there's a large variety of things that led to our ability to do that. And, what that meant about our financing process and how that played into all of this was, when we first launched our financing, our capital raise process, we essentially contacted most, if not all, of the pre-existing investors in that organization and basically, came to them with a pitch of, hey, we want to pull this technology out of this business. We believe it's highly investable as a standalone asset with a business stood up around it. And that for a variety of reasons, the organization that this product is trapped inside of today is not a suitable vessel for this product to find market success. And so, we are our first, probably 50% of our capital raise, maybe 3/4 even of our first capital raise, pretty much all came from those initial contexts of hey, we know that you're invested in this organization. Your organization is in this position for a variety of factors, and we want to pursue this and stand it up on its own. And it was a compelling enough pitch that I think all those individuals got aligned with us on that. And we believed it very truly, and believe it now more than ever. I mean, as we're actually executing that. And so, that's what was really unique about the origins of this particular financing round. I've raised capital at previous businesses, and that's been my role in the past as well. And this was definitely unique comparatively.
Yeah, that is definitely a unique situation. Was there any pushback from those initial investors, right? You're essentially taking assets out of a company they're already investing in and saying, hey, I don't know if this is going to work in this factor, or I don't know, how did that feel, even like sort of having those conversations? I feel like that might be a little awkward, I guess.
It was actually much more straightforward than what you might think. It was such that organization was not in a good position. And I mean that financially, and I mean that from an investability perspective, right? It was financially at a bad place, and structurally as an entity was unfinanceable. Like, it couldn't be financed any further, and it was carrying debt. And so basically that was the unique circumstances where it was basically like, hey, look, this is trapped with all these other assets that are kind of doing their own weird things. This has not really been commercialized yet. And, I'm a big believer in this market, and I think that it's not been tested yet. And I believe we can go, really, really have a huge impact. We'd like to pull it out. And so, the resistance was pretty low because their situation was such where, yes, they were invested in that pre-existing organization, but that organization was going to, was going to zero essentially. And so it was, hey, we can offer you potential upside with what we believe is the gem that's hidden inside of this organization.
Gotcha. So that makes a ton of sense. And then so I'm always curious about this. And Matt touched on it earlier, where, a big part of why they really liked you guys, even though you were a bit earlier, was that first enterprise contract. For you, Graham, how did that come to fruition? I always imagine it's got to be like one of the toughest things, like as a startup, to get an enterprise to buy in. So how did that come to be, and how did you make that happen?
A lot of that big win is largely attributable to my co-founder, Dan. He really was driving on that in a pretty big way, but I can speak to it a little bit. So it's definitely tough. This is where the state of maturity of the product mattered a lot. So for a large organization like that, in an early stage business like ours, a lot of times there's a lot of concerns about security of your product. There's a lot of concerns about compliance. And because the product had been in development for, a couple of years, by the time we pulled it out of that business, it already had achieved SOC 2 compliance. It already was, encrypting data at rest and in transit. It was checking the boxes that would be required to pass significant security audits. So that was a huge task all by itself. And we continued that tradition. It was actually like one of the very first things we did after buying out the assets was we've got to renew all of the above and prove ourselves to this organization. And then there had been a small pilot program going on with this enterprise in advance of us taking over the product from that organization. So they already had some pre-existing exposure. And so we took that pre-existing exposure and then quickly drove it into a contract. I think that happened within 4 months of us starting the company. 4 to 5 months, we closed that first deal. So it's a tall order. And having that mature product out of the gates was a massive contributor to that. And then also having that, pre-developed relationship with my co-founder helped out quite a bit as well, because he had been running the pilot program in advance of that.
Gotcha. Yeah. And then so Matt, on your end, sounds like you were, later to the fundraising side of things. Did you guys fill out the rest of the round, or was there still some space afterwards? And then, Graham, if not, how did you think about sort of filling out the rest of the round as far as, strategic capital?
Yeah, Graham, I'm not even Sure. I know there was some confusion and everything. So I think we promised a certain amount, but ended up not being able to do it due to some situations with complexities within our fund and everything. And there's a lot of complexities there that we don't have to get into. But yeah, so I'm not sure if we ended up filling it out or if you were still raising after, but we definitely were near the tail end of the fundraise. I know that.
Yeah, you guys were very close to the tail end. We did take in just a little bit of additional capital. It's actually more like in parallel to the process with you guys, and so it was in that kind of last tranche, if you want to call it that, with a couple of others, kind of smaller players. Nobody that was coming in at the scale of Cultivate, and so and then we did, like I mentioned before we jumped on here, basically after we took in those additional couple of individuals, we chose to close the round and said we really don't want to take more capital in as part of this financing event. We want to look towards the future.
And was the main reason for that just felt like you had enough to get where you needed to be and avoid taking more dilution? Because I'm always curious about how people like the closing ends of the round, right? Where it's, I don't have a small allocation left. Like I really want them to be strategic investors. So curious if how you thought about that, or if you felt like you had everything you needed and didn't want to take extra dilution, or how did that thought process go?
There's a few reasons why we decided to close it out there, but really the primary one is we made some very critical hires in the last few months that are completely changing the trajectory of our business, both in terms of technological leadership, but also in our go-to-market leadership. And, we're nearing signing deals that are going to dramatically impact our revenue projections for 2025 and 2026. And we felt like where we're at right now, the capital that we have on hand in terms of runway, we felt comfortable that we would secure these deals as a leadership team. And we made this decision together as a board that we would go ahead and close the round and pursue these deals, that because we felt such confidence. And then there is one other factor that contributed to that, because obviously you got to think it's so hard. Are you making like very complicated decisions, right? I'm choosing specifically not to take more capital when I have an open financing round is like an odd thing to say for a lot of startup founders. And part of what also drove that was, we had a willing partner at the table who's intimately involved in the business who said, hey, I completely agree. I believe we're going to close on these couple of deals that are going to be trajectory changing for the business. And I'm so confident in what I've seen and in the team and the growth that if we choose to close this round and we still decide that we want to take in some additional runway, I'm willing to, participate as well with a, a different kind of financing instrument that would help contribute to a Series A financing through, convertible debt instruments or whatever the means might end up being. That we felt like, okay, even if we decide to change up the strategy here midway through on these deals, we'll actually still have the full runway that we were originally anticipating.
Yeah, and then so on that point, right, where you are being sort of choosy about, who you're raising from, how much you're raising from, what was it about Cultivation that, really got you excited about working with them? I know everyone says, capital is great, but what was it with Matt and the team that, got you really excited? I think you mentioned user bases. So is it like customer introductions, or how did you think about that?
Yeah, so a little bit of both of those things. So one is so there's a couple things that I was thinking about as we went towards the end of this round, which is, hey, we really should find a partner who ideally has some exposure to our market. And the team at Cultivate has partners who have backgrounds that are relevant to our space, and that matters a lot to me because we think, really our product, the more you dig into our product, the more you would understand, like we solve a lot of human problems in our space. And unless you have some exposure to that space, it's difficult to understand the impact those had. If you're just an outsider looking in, it's easy to be dismissive of some of those problems and go, it's not really a big problem. It's like, have you ever actually done this? And so that matters a lot. The other piece was they do have some relationships with who could be large enterprise accounts for us eventually, which is really valuable and important. And then the third factor that we were thinking about is we knew, given our plans, that with the way that we were considering adjusting our go-to-market plan, that we very likely were going to want to raise, kind of a little bit of a larger round in the not distant future. And we knew that Cultivate has, as Matt laid out, a couple of different funds that participate in different ways. And we knew, okay, they're a partner who, number one, can probably grow and participate in that future financing if the relationship continues to grow and blossom and we hit our goals. And that also, they demonstrated that they also had relationships, right? Matt has made introductions that have been very useful on the financing front. And I would expect them to continue to do so. So for us, it was a variety of factors that got us really excited about the team.
Yeah, and Matt, from your end, how much of that goes into your guys' decision of, hey, like, can I really help this team in very specific ways? And what was it, I guess, maybe specifically for CADchat that you guys felt like, hey, we can really, aside from capital, make an impact on this team and this company?
Yeah, that's certainly a big factor in deciding whether or not we invest in the company is, are we more than just a check? We definitely want to be a strategic partner. We're fortunate at Cultivation Capital. We have a lot of partners within the cultivation umbrella. So that allows us to have a lot of friends in high places and a lot of really helpful introductions, both on the financing side, but also just on like the enterprise side as well. So we think that we could be value add from a network perspective. And then also, like Graham said, we thought, given that this is, an exciting B2B software company which we believe has a technological moat and could see some really good growth in the near future, that it's on the table for us potentially, participate or lead a Series A of some kind with them. So that is also something that we seriously consider for all of our funds. So if we look at a healthcare deal, we would want that to potentially lead to a healthcare focused fund led deal in the future, that sort of thing. So yeah, we thought that we definitely would be more than just a check in this investment. And so it was another one of the reasons for us to invest, because at the end of the day, we want to invest in companies that we're comfortable with and that we understand. Like if it's something that we really know nothing about, it could be a great opportunity, but it'd be difficult for us to diligence and difficult for us to add value. It's probably not the right fit for us. And we thought, given that one of our partners was a former engineer, McDonnell Douglas, which is now Boeing, like he understood the problem. We have another partner who's not a part of this fund, but a different fund that used to sell CAD software, like the software that CADchat is currently integrated with. And so it just made a lot of sense that we thought we could be more value add than just another investor on the cap table.
Yeah. And Graham, how do you as a founder leverage all of your investors to be able to, glean the most help from them that you can? Is there anything that you've learned as far as like specific asks, or just curious if you have any thoughts on, how other founders can really like get the most value out of their investors?
Yeah, well, the number one thing, and I wish I was better about this actually. So this is, it's a great question. It's something that I need to be better about, but it's something that I do think about. Step one is just don't be invisible. I think it's don't go into a relationship with a financing partner and then just fall off the face of the earth the second they write a check. You should be following up. Hey, let's have a follow-up call. I want to talk to you about some of these hires that we're making. And also not being afraid to make specific asks. Hey, you guys had mentioned this group. Is that somebody you might be willing to make an introduction to? These types of things. But yeah, I mean, really, it's at the end of the day, it's like, don't be invisible. And like people, these people are invested in your success, literally. And they're going to, if you expose, the state of your reality at any given moment of your business, it's far more likely that you're going to get help in areas where you need help, and that you're going to get support in areas where you need support. So I think that's the main thing. Don't be invisible, whether that's emails, text messages, calls, whatever the answer.
Yeah, I mean, I feel like monthly updates are one of the best ways to do that, because, I think Matt would agree with this. If we don't know how to help you, we can't help you. And so like you mentioned, Graham, if you're invisible, I'm going to assume everything is good. And I, can't help. There's nothing I can do to help. And so Matt, sort of on that point, what is, I guess, your philosophy with that? Because there always is a balance too of, hey, I don't want to get in the way. Like, you guys are the experts here. I'm here to help. So what is your philosophy as far as, obviously if there's a connection that makes a ton of sense, make those connections and things like that. But as far as, checking in and saying like, hey, is there anything I can do to help? Or is it mostly inbound? Or how do you think about those sort of things?
I would say for us, we're in a little different position, just given that all of us at Cultivation are overseeing dozens and dozens of companies. So it's hard to keep one company top of mind. Usually it's the one that you're a board member or board observer on, are probably the ones that are top of mind. So I would say a lot of it is going to be on the founder to really make those asks, just because we have so many fires we're putting out at any minute. It's a little difficult. So that's been a big thing. It's something we've really been trying to harp at our portfolio companies. It's like, when you need help, ask for help, and feel free to reach out whenever, and like, just don't be a stranger. A lot of times when it comes to like reporting season, we try to do a end of year and a mid-year report sort of thing. And some companies, they have it already. They're ready to go. They're excited to share what happened. And they're also willing to tell us like, any bumps in the road and things that they struggle with. And then there's other companies that it's like pulling teeth to get the information that we need from them. And those are the companies that probably need our help the most. And they're just not asking for it. And we're like, it might be a bad update, but like, we can help you if it's a bad update. So we really try to make sure that all the portfolio companies understand it's like a judgment-free thing. Like, we're invested in your success, like Graham said. So we want to know the good, the bad, and the ugly, and we can help mitigate some of those things. We're a little bit more hands-on when it comes to the companies that we're board members or board observers of, just because that's kind of the nature of the beast. But the ones that we might just not have gotten an observer seat or participate in a round and didn't lead the round or whatever, it's going to be more on the founders to reach out to us. Like, we try to do periodic updates, and like, usually, when we go over every single company at the investor meeting and just kind of give an update. And if we haven't heard an update in a while, we'll be like, all right, it's probably time to reach out, that sort of thing. But other than that, it's probably going to be on the partner to really lead the charge there.
Yeah, I think one of the biggest mistakes founders make is that, being afraid to send an update if, maybe there's, bad updates or really not any update at all. It just, it keeps you top of mind. It makes you, they're still kicking, right? They're still working hard at it and they're getting after it. Versus if you say nothing, who knows? We don't know if you stopped working on this 6 months ago and just never told anyone. So I think, the biggest piece of advice I would give is like, always send updates no matter what, or you're not going to get any help. And so Graham, so as far as this entire fundraising process, for other founders listening, is there any piece of advice that you learned from this process or anything you would have done differently? Anything out there for other founders sort of maybe in your shoes, maybe 6 to 12 months earlier? I know it's a tough question. So.
Yeah, it is. It's a tough question. So I'm trying to think specifically about this round because I've, as I mentioned, I've raised at other organizations in the past, and I think it's raise. This is going to sound like ridiculous advice, I guess, but because it's a little bit hard to control this to a certain degree. But I think like raise at the right time. Know your business and understand why do I need these resources? How am I going to be putting them to work? Have a lot of clarity in that, because sometimes I talk with founders who I think it's not completely obvious that they're even necessarily in a business that it's obvious that they would maybe need to pursue something like venture, and maybe their business isn't shaped in a way that makes sense for venture in any way, either for them or for a venture group. And so I think it's like, understand what the purpose is of the venture community and make sure that your needs are aligned with the needs of your business are aligned with, that market. It's the same exercise that they should be going through with their customers to a certain degree of just making sure that you have this extreme alignment and saying, okay, I am in fact in a business whose capital requirements are not necessarily completely aligned with my near-term growth ability, and therefore I need to offset that, with resources that are going to help me support the growth of my business. It's fundamental things, because the amount of people that I talk to who are also founders, there's a lot of misses just on fundamentals and having a fundamental misunderstanding of what are the goals of the venture community? What do the types of returns look like? And does your business fit that profile? Yes or no? And if it doesn't, then it's probably just not the right fit. And, looking towards the venture community is not the right idea. And there's probably some other better mechanism for you to pursue. And then there's a timing thing, right? Which is make sure that your business is in a position to actually, execute these things. Well, we talk a lot internally about, striking while the iron is hot and making sure that, we have everything around the table. Like there is this weird thing of, success compounds in a lot of ways. And so, it's one win leads to another win, leads to another win in a lot of cases, as long as you can keep that thing up and running. And so I guess, make sure that the timing of where you're at with your business is going to make sense with that. And also be reality oriented about how long a capital raise takes. It takes some time, and you shouldn't think about it as this thing you go and do every now and then. It's hey, I keep hey, I'm going to keep a list of relationships with folks in this community so that, when my business is in a stage where we're going through a growth period and venture makes sense, I'm not somebody who's been invisible right up until that moment.
Yeah. And then Matt, so I mean, this was a different use case because it was a warm intro, but for you guys, what can a founder do to, I guess, maybe set themselves apart to get your guys' attention and hopefully get that first meeting?
Yeah, I think there's a few things. I think number one is know who you're pitching to. Like if you're a robotic startup, it's probably not a fit for us since we're more software focused, right? So if you reach out to us, it's unlikely that we'd be able to, again, add value because we just don't know that space much, and we're focused more on software. So really just understanding and finding the right investors for the company that you're building is probably number one. And if you can curate your cold outreach or however you're reaching out to that company is going to be key. And if a founder show that they did the work and understand your thesis and everything, it's a very high chance I'm gonna take that call just because it probably fits our thesis. And then the founders just showed hustle. So that's probably the number one thing I would recommend. And then I guess a little bit after that, if you do have the pitch, I think the number one thing you can do is just be completely honest and transparent. A lot of early stage companies have some, skeletons in the closet or some problems that they're dealing with and everything. And the more you're upfront about it and the more open you are about it, and it's not like myself uncovering it during the diligence process for a company we're really excited about, then it's like,
yeah,
oh, your customers still haven't paid you or whatever, or this is really ARR or whatever it is. Certainly that says a lot about the founder. And obviously when you're making a venture investment, it's not a 1 year commitment. This is a 5, 7, 10, 12-year commitment sort of thing. And you have to invest in people that you trust and believe in. And so I think being open and transparent about the good and the bad is something that really stands out to investors when they're considering an investment.
That's a perfect transition as we wrap up. So Matt, if there is a company or founder out there that, may be a good fit for your guys' thesis and wants to get in touch, what's the best way for them to do that?
Yeah, I would say you can either just DM me on LinkedIn at Matt Pimbavong. It's right there on the screen, or not as high of a hit rate, but I am the person who checks it. Is we have an info email, so it's just info@cultivationcapital.com. So you can feel free to email that email as well. Those are probably the two best. Or if you have an existing investor base that knows Cultivation Capital, I'm always open to warm intros. So definitely try to leverage them and reach out to myself or somebody on our team. And that'd be another great way to connect with us.
Fantastic. And Graham, on your end, if there are any potential customers, investors, supporters out there listening, what's the best way for them to get in contact with you?
Yeah, well, step one, to learn more about us, our website's cadchat.com. We have a YouTube channel with some informational videos about what we're up to. And you can contact me directly anytime. Graham@cadchat.com or info@cadchat.com will get you to me as well. And, I guess just, last thing that I think might be helpful to say for founders is, you're a human. Don't be afraid to be one. It's the capital raising process is not Shark Tank. It is a very human process and a very human conversation. And to Matt's point, it shows through if you're not being a human. It's be honest about where you are, and if you want to find partners who can look at that madness and say, hey, we get that, we'll work with you to find a way through that. That's much better than coming in with a fake story, being 10 foot tall and bulletproof, which isn't reality, and finding partners who want to be part of that reality with you. So.
Fantastic. Well, thank you guys both so much. This has been super insightful. Appreciate the time. And thanks again to everyone for listening. Have a good one, guys. That's a wrap for this episode of Inside the Deal. We hope you learned more about how these rounds really come together.
You're also invited to check out PIN, the easiest way to invest in startups with your community, whether you're accredited or not. Learn more about us at getpin.xyz.
If you enjoyed this episode and are looking for more venture content, make sure to check us out at sandhillmarkets.com. We run a weekly newsletter, live events, investor syndicate, and other great podcasts like this. Thanks for tuning in.